Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Ed Carson here with a breakdown of the action in today's session, as well as how the week turned out. And even though stocks closed off lows today, Ed, it was not a good day, and it was not a good week at all.
It was an ugly week. Bad action for the leading stocks and major indexes. Do want to take a look at three stocks that are holding up relatively well: Caterpillar, Elf Beauty, and Insulet.
All right, well, detailed analysis for those three stocks headed your way. But first, let's take a look at those major indexes. So the NASDAQ today closing down 1%, harder hit. We had the S&P 500 down 1.1% for the day, taking the hardest hit. Also, the Dow down about 0.8%, same for the Russell 2000. So this is a breakdown here of what we were starting to see as some steps in the right direction for the broad market, but really coming apart here this week.
Yeah, I mean, the weekly losses were big, but it was even worse looking on a daily basis. Because, okay, Monday's fine, going there. Tuesday, all the major indexes got above their December 1 highs. So we're basically at the highest levels of the rally, 3-month highs, 8-month highs. I mean, looking pretty strong. Here we go. I mean, it was a good bullish, and a positive inflation report. And then things came down. The next day, the market reversed on the Fed rate hike outlook, suggesting more rates are coming and they're going to be coming higher than maybe people thought. Thursday is when the damage really started to, okay, now it's really, it's not just disappointing, but really damaging. The NASDAQ got below the 50-day line. The Russell got below the 50-day line. And then today, the S&P fell below the 50-day line. So really just every day, just that the gap between Tuesday morning and Friday close is really unpleasant. And at least on the major indexes on a weekly basis, this was not just an outside week. If it's an outside week on the upside, that's really bullish. If it's on the outside week where it engulfs the prior week, where the high and lows are higher than the prior week's highs and lows, but this is higher than the prior 4 weeks highs and lows. So there was this range we were in, and we just came right down through it. It looked like we were going to break above it, and it was such a expectation breaker then to come down like that. And then there was that declining trend stops. There was all these signs we were just about to go, and it was just like everything's going, and then wham, everything came down. The market went under pressure after Thursday, more pressure today. Just really ugly action. The indexes, leading stocks really know better. A lot of damage on promising stocks.
Right. And what we had been saying is when you get this sort of defined support and resistance levels, it can be pretty telling when you break one way or another. And we were looking for that indication. And you're right. Intraday, earlier in the week, it was looking promising, but where we closed, maybe a little bit of foreshadowing for how the rest of the week played out. And this sideways range and chop and a lot of volatility involved in this area here. We did see a shorter little sideways move earlier in the year, right here in May, and we were saying something similar. And now that we have this defined range, which way are we going to break? And we did break lower, not to say that we're going to see the same type of declines as swiftly or even further declines from here. Maybe the S&P gets some support around these levels. But when you talk about the overall health of the market, this week was definitely damaging to that for many reasons, as you mentioned, Ed.
Yeah, and one other different scenario would be the June-ish scenario where we looked like we were going to fail. Like we sort of flopped around and we came down, like had this rally, and then we flopped back in June, came down, and then we went on a nice rally. We eventually halted. So it's possible that we have this damage and everything looks darkest before the dawn and everything gets better. I mean, so we don't know. What we do know is that it's very unclear. We never should try to guess. What we do know is that clearly right now the market is not healthy.
Mm-hmm. I guess at least in this situation, we are a bit closer to some of those moving averages. So I think that's what makes it especially tricky now is we're not all too far from testing lows, and we're not all too far from this rally really looking like it could pick up steam. So the twists and turns and pitfalls and setbacks continue up until the final weeks of 2022 here, Ed.
Yeah, it's been a tough year, and it doesn't look like it's going to be a. Santa hasn't come yet. Let's put it that way.
He hasn't, but we'll stay positive. We'll stay believers, whether it's in Santa or the next market rally that will eventually come. We just don't know exactly when, but we gotta keep our eyes peeled on a daily basis for those subtle signs, or maybe not so subtle signs. There's that too. All right, well, moving on. We haven't taken a look at the Dow yet, so let's just quickly go. There's your DJIA, which had really been leading this move off lows. It's still holding above its longer-term moving averages for now.
Yeah, it actually undercut the 10-week line intraday. I believe it closed above that level. So that's interesting. It'll be interesting to see if that can hold it, but this is sort of like the last one. It wouldn't take much for the Dow to then go below the 50 and the 200-day line, and that would be a pretty negative sign. Just, yeah, it's hard to find a lot of good news here.
Yeah. Well, let's take a look at the 10-year Treasury yield, 0 TNX, down for the week and still close to that 3.5% mark.
Yeah, it's coming down now. The Treasury yield is, especially the 10-year yield, is more of a reflection of recession fears than inflation. So, it's just that markets are fearing that the Fed will push the market, that in the economy, into recession as it tries to snuff down, bring down inflation, because inflation came down, but it still was 7.1% in November. That's not great. So that's the concern right now.
That it is. Okay, and now let's take a look at some of the sector action from this week, starting with XLI Industrials, an area that we considered a promising group with potential leadership here, but it reversed lower for the week, closing down 1%. All in all, not too much damage, still holding above those moving averages for now. Let's also take a look at XME, the metals and mining ETF. A downside move here this week, off by 2.6% in its second weekly loss in a row. Also, XLV Healthcare reversing lower, an outside week, down 1.8%. Also want to check in on chip stocks, talk about a big outside week here, engulfing the prior 4+ weeks of action, down almost 3% for the week, when it was looking like it was shaping up nice and tight around a pretty critical area. But again, we could not see it get above resistance.
Yeah, I mean, so in many of these cases, you have a couple of good days, and all of a sudden, all the sins are forgiven. It's like, okay, not all the sins are forgiven, but it'll feel more positive. You could see that, oh, okay, it was just a test. But yeah. This was like the major indexes. This is one of the things that was really disappointing, where the week was a lot worse than the weekly decline, which would state, and the weekly declines were not good.
Mm-hmm. Yeah, great point there. And also checking in on ARKK, tracking the more speculative growth stocks, down 4.1% for this week, with Tesla in rough shape, maybe buoyed a little bit today by that one. What was the one?
Exact Sciences.
Exact Sciences.
I'm a little surprised if that one actually held flat. That seems like there's no way it could have been in that range, but it's right above 5-year lows. I mean, that's the thing, is that it's just, November peak, November 9 or so, that's the 5-year low. So it's a lot of damage this, for the speculative growth. And it's not just the stocks it holds. Growth names, especially highly valued growth, they're all really struggled.
Exactly. Yeah, just a proxy for that. But, I think one thing that 2022 has taught us is really how to recognize signs of topping, right? Whether it's on a stock level, an index level, or even a sector level. These are all things that we're keeping an eye out for to see what's going to be next. Maybe areas that have been leading this year, are they now starting to show some of those topping signals, like energy?
Yeah, that's a really good point. And it's like, and if you see those, you have to react to them. And it doesn't necessarily mean that you immediately sell everything at the first sign of weakness, but you want to show signs of times, like at least take some partial profits along the way. So if things really break down, you can get out still with a gain or avoid kind of losses, because that's the worst thing. You don't hate to be in a strong group and end up with big losses or a strong sector.
Hmm. And now let's take a look at some individual names. So, industrials still on our watch list. Names like Caterpillar, CAT up 2.4% for the week. So, trying to resist the downdraft here, Ed.
Yeah, so while it closed off its highs for the week, I mean, a 2.4% gain this week is pretty impressive. Held the 21 day. This little consolidation was sort of a handle to this long base. Well, that's now going to be a flat base on a weekly chart. It's not going to show up for a couple hours, but it'll be there. It's long enough for that. You can see how the RS line really ramped up this week, even on Thursday, because that's still outperformed. So that's basically at highs, looking really strong. Again, there's a lot of signs that infrastructure plays will do well. So there's a lot of these machinery, materials that are setting up, and this is definitely one of those to keep an eye on.
Okay, and let's also take a look at Elf Beauty, ELF. Elf is on a shelf here. This has really been a standout stock for the second half of the year.
Yeah, I mean, if you bought this on the breakout kind of thing, it like didn't really give you a strong reason to ever sell. I mean, even when the market was sort of tumbling in September, going to bear market lows, it just sort of held along. Now it's sort of been consolidating for a while. Now, there's arguably it's been trading tightly. Arguably, you could like add some more shares. I wouldn't say a new position, but ideally it would continue to consolidate or pull back, either form a new base or come down to the 50-day line, maybe both. That would take some more time because this is
Right.
a really strong growth, but at the same, accelerating growth on the sales, some nice acceleration on the earnings. Have to wonder how much growth. I mean, it is a 50 PE for a cosmetics maker, and it has had a huge run from there. So taking a break would be nice.
Yeah, and it's about 10% above this 10-week line. And about 3.5% from its highs. So you factor that in. So say if it comes down to touch the 10-week line, that would be a depth of 14% for a base, which is still considered a pretty tight base.
Yeah, it would be. And, and it's going to, the 10-week line is going to race up, like a buck and a half or so or more for the next several weeks. So just a couple of weeks. And that would start, then that pullback, if it came down, wouldn't necessarily have to be that severe. So
Right.
if this one consolidates, then that could set up another run that, for a chance to enter this one.
All right. I'll be keeping my eyes peeled for that. Would love to see this touch the 10-week line. We'll see if we can get it. Okay. And last but not least, PODD, Insulet in the medical products group, a diabetes play, and Peer to Dexcom down 1.1% for the week, but all in all, holding up nicely with support for now at that 21-day line, and it's hanging right around that 300 level.
Yeah, the declines have mostly been on lighter volume. There's a few more blue spikes holding the 21-day line. This is a base on base formation. It's got this tight flat base above some sort of a couple of mini long consolidations. A base on base is actually a nice pattern in a weak market because it shows you that stock is resisting. It's not, instead of it giving up all of its gains, it's like it moves up and then sets up again, really resisting the selling. The RS line is pretty close to those highs. Certainly been on a nice trend here. Growth has been starting to pick up again. Looking, you can see that it's supposed to be strong growth, going into next year. So, that there's a lot of reasons to like that. Obviously, there was some trouble for a while. There were some losses and other things, but definitely one to watch. This is not so much on the defensive growth side on medical; it's more the growth side. But definitely one to watch right now.
So I guess the question, Ed, is where do you buy this one? Because breakouts have been so tricky. And the last time this stock broke out, it didn't make any progress, which is great, as you said, in this market. But in terms of trying to get in it and trying to make a gain, we've been focusing more on pullback buys. So does it need more time, or would a bounce off of this 21-day line be something to consider?
I mean, if it got above the recent highs from this week, it probably wouldn't be too far from the 21-day line, but it would be, starting to get up there. So, probably about 5%. Be great if it could consolidate for a little while longer and be a little more room where there could be a trend line, the 50-day line catches up a little bit more. Just everything's tricky. One of the problem is that with this engulfing week is that, okay, buying on strength was tricky, but even now, buying on weakness or buying on pullbacks didn't work because everything we're underneath all of that. This one held up really well. This is not at 5-week lows. This is showing that relative strength, but still, for the most part, it's been tricky. So I think, you'd want to wait in front. Like in general, watching. I mean, it's just not a good time to be buying stocks. There's things that might look good in a couple of days, a couple of weeks, but for the most part, you want to see some stronger market action before you really do anything right now.
Yeah, sounds like a plan. Okay, let's talk about what we should do to prepare for the week ahead. We're about to see perhaps a couple of quieter weeks here, Ed, with the holidays, but now seems like the best time to look at our shopping lists and focus on those stocks with strong relative strength, as you mentioned, that are resisting the downdraft, and get ready for better conditions before really making too many buys.
Yeah, that's probably the way to go. So instead of focusing so much on, hey, this stock is ready to buy, or like right at the buy point, it's fine if you find some of those stocks, but the focus really should be more on this relative strength, even if they don't look, the pattern doesn't look perfect, because it could be a while before things set up. So look at those stocks with the relative strength at or near highs, the ones that are holding support, like the 21-day, the 50-day line. And those are the kind of things you should be watching right now. If the market shows some strength, then you start to hone in on and start thinking about buys. But right now, it's more about getting a list of resilient stocks ready to go for when the uptrend, when we have a sustained uptrend.
Sounds like a plan, Ed. Well, thank you so much for that. And thanks everyone for tuning in. Coming up at 5 p.m. Eastern, join me on my YouTube channel for Trader Tales with IBD, where I will be joined by Evan Medeiros. He's founder of thetraderisk.com, and we're going to be talking about the importance of having a rules-based strategy, and on top of that, how you can really refine your strategies. There's lots of rules and tips and tricks out there, and setups and buy points and sell rules and thoughts on position size, and it depends on who you talk to. So there's a lot to sift through, and I'm looking forward to getting Evan's thoughts on that, because speaking of having rules, we're coming up on the end of the year here. It's time to start thinking about doing that post-analysis. Did you follow the rules? Did you break the rules? Were they good rules? And what was the thinking on that? So anyway, just some of the thoughts that I have heading into this conversation with Evan coming up at 5 p.m. Eastern. So I hope to see you all there. We'll also put it on our site and YouTube. So our site, investors.com/videos, later today. So you can also check it out there. All right, Ed. Well, this was fun, and I hope you have a great weekend.
Yeah, I do too. So I hope you have a great weekend as well.
Sounds good. All right. Thanks for watching, everyone. We'll see you back here next week, starting with IBD Live, investors.com/IBD Live for all the details on our daily morning live stream. We'll see you there. Thanks, everyone. Have a great weekend.